next guest says that in this environment, traditional diversification models need to be thrown out and that Bitcoin is the ultimate inflation hedge combined with the ultimate venture play. Roy Niederhofer is a pioneering quantitative hedge fund manager. He is the president and founder of RG Niederhofer Capital Management. His flagship fund defied two market crashes, up more than 100% in the dot-com crash and up 51% in 2008 when the S&P 500 was down 38%. And his Smart Alpha Fund has had double-digit annual returns since 2000. Roy is also a Bitcoin OG, getting into the crypto space as early as 2011. Roy, welcome to Kitco. Good to have you.
Great to see you, Michelle.
All right, Roy, we have inflation at a four-decade high, worst since 1982. Fed Chair Powell saying that the Fed is going to tighten, ending asset purchases in March, raising rates over the course of the year. Now, Powell's admitted that he was wrong on transitory inflation. It's clearly not. But do you think that the Fed can effectively rein in inflation now? How persistent do you see the inflation problem?
My view for a long time has been that the money printing that has occurred all the way since the global financial crisis in 2008 is really coming to a head now. So while we may have a trigger with COVID and some of the supply chain issues, this is something completely structural that we're experiencing. My view is that this is not going away, and moving rates from 0 at a 0.25 to 0.5 up to 2% is not going to make a significant difference when you have real interest rates of minus 7%.
So you don't think that the Fed is going to be sufficiently aggressive in tackling inflation? Is that what you're saying?
Well, back in the 70s, when I started my interest in investing, we had interest rates in double digits. And under Volcker, he was very comfortable having rates of 11, 12%. My view is that while it may be what it takes to rein things in right now, that kind of double-digit interest rate, there's absolutely no way that we can achieve these because number one, it'll probably crack the stock market long before that. And number two, it raises the funding costs for the government so high that it's absolutely impossible. The government can't exist anymore with short rates of about, say, 3 or 4%. It's just too high right there. We can't go to 12.
Okay, so you're saying what many of our guests on this channel have said, that the Fed is stuck between a rock and a hard place and simply doesn't have the tools to rein in inflation. So where do you see inflation going, big picture?
I think the long rise in equity markets and in all sorts of investable assets represents one place where we have seen inflation for many, many years. Now it's starting to creep in a lot of other areas. Obviously, labor prices are increasing, and with everyone staying home now because of COVID and probably not coming back, we're seeing commodity prices increasing, and of course, crypto prices have increased. So my view is this is the root cause. Again, is the Fed that's behind this.
All right, so you're saying inflation persists. Bitcoin is seen by many, including yourself, as an inflation hedge, yet it's down around 35% from its high. So what's going on here? Why have we seen this correction?
I think for many people, Bitcoin really is a risk asset, but this is, I would call them a group of marginal investors. They're not the core investors in cryptocurrency. They're people that are in Robinhood. They're people that are just essentially retail investors. And when something goes down in their portfolio, they need to raise money elsewhere. And we saw an extreme example of that in March of 20, when pretty much anything that had a bid was sold. And it was the long bond got sold, the stock market got sold, crypto got sold, gold got sold. Things that you would never expect to be correlated got correlated in a big risk off move. And I think we see a little bit of that when the Fed was clearly becoming a little bit more aggressive at fighting inflation. So I think that spooked the crypto market somewhat. But really, one of the greatest reasons for crypto investing is an inflationary environment. So the core thesis, if you believe that crypto is in fact an inflation hedge, is even more bullish now than it was. If the Fed is serious about fighting inflation, well, you better have an inflation hedge, because what if they can't what if they can't do what they need to do?
All right, but one of the, as we said, common investment cases for Bitcoin is that it serves as a hedge against rising inflation. If we do have a more hawkish Federal Reserve, as Powell is indicating that it will be, do you see that sentiment, if nothing else, just the belief that the Fed can be effective, taking the wind out of Bitcoin sails?
I think it's a little bit like, if I gave you a gold necklace and you said, well, Roy, I don't like this necklace because it's not a good inflation hedge. Well, there's a lot of reasons to like Bitcoin beyond the inflation hedge aspect of it. And I really see Bitcoin as a remarkable, innovative asset that combines many features of cash, of a store value with a fixed supply like gold, almost a collectible, and the ability to have it rise tremendously in value because it is growing in its utility. So it really, in some ways, combines not just an inflation hedge ability, but the best qualities of other stores of value, the stock market, and cash, because of course you can transact with it anywhere in the world. And that capability is literally growing by the hour.
All right, so let's break that down for us. Why do you see it as not only the ultimate inflation hedge, but as you just mentioned, bringing in the best aspects of stocks, gold, and cash, and being a venture tool as well? Break that down for us.
Sure. So there's an enormous demand right now in the digital asset space for capital. And what's happened so far is that there hasn't been a good way for new ventures in the digital asset space to get access through the traditional capital raising markets. So they're looking to digital asset holders, people that have Bitcoin and ETH, to fund these projects. So there's an enormous demand for coins and for stable coins, USDC, Tether, and others in the space. And because of that, yields are very, very attractive. From the safest, you might call the spot rate of Bitcoin, just like you can get a spot rate in investing US dollars, the spot rate of Bitcoin is probably somewhere between 1% and 4%, depending on where you'd like to put your Bitcoin. But if you get further and further into the DeFi market, if you're willing to make a direct VC type investment into a new project, the rates of return are even in the double and even in the triple digits in many cases. So this is an attractive return situation, far better than a US dollar account, which is paying zero, and in many cases in Europe, for example, negative. So we have that aspect of it. We have another aspect of it, which is, while Bitcoin is very, very volatile, yes, we admit that. And for maybe US residents, it seems like it's, why would you ever want to take that kind of volatility? But if you're in a place like Turkey, you're in a place like El Salvador, as we all know, interested in Bitcoin and making a huge transition there. In Africa, this is actually a very interesting place to put your money. And of course, not only can you get this interesting rate of return on it, but you can send it to your friend for almost zero using. Even Bitcoin itself is now in the small numbers of single-digit dollars to do a transaction. With Lightning Network, it's literally sub-penny, with transaction capabilities of 1 million transactions per second coming for Bitcoin. So this, as a financial transaction tool like cash, is far superior to cash. It's far superior to the Visa network, which everyone holds up as the standard. I can't use the Visa network. I have to use a wire transfer. It takes me about 100 times as long and 100 times as much money for me in the business to send a wire transfer than it does to send $100 of Bitcoin, let's say. So we have that aspect of it. So that's the cash aspect. The other aspect of it that's very interesting is the store of value aspect. How is it better than gold? Well, for one thing, if you have gold in a safe, you don't end up with more gold coins when you open up your safe. Well, that is true with Bitcoin. It has an absolute finite supply. There never will be more than 21 million Bitcoin. But with gold, you can imagine there might be a technological advance that increases the supply. As the price goes up, mining becomes possible at higher rates at higher costs. So the price of gold actually can increase. The supply of gold can increase. So in some ways, it's not quite a fixed supply asset the way Bitcoin is. So we have that aspect of it, the store of value and the fungibility, as I said, for cash. And then the final piece of it, why is it like stocks? Well, you essentially can make venture investments. Bitcoin comes with a beautiful ecosystem of investment possibilities, just like the stock market. So there we have the three asset classes combined, and that's never happened before. That's the innovation.